For years, I thought investing in real estate meant buying another house, right? You find a property, you put money down, you find tenants, you collect rent, you deal with the repairs, fix broken toilets at the worst possible times, and hopefully just make money in the long run. That's just what I assumed real estate investing was supposed to look like. But over the last several months, I've been looking at my own life, my schedule, my long term financial goals, and I realized something. I don't necessarily want another job. I want another investment. So instead of buying another rental property, I recently started investing in private real estate through Fundrise. And over the next several years, my plan is to invest about $500 every single month into it. Today, I want to explain exactly why I made that decision, how Fundrise actually works, and how eventually you get your money back out, the risks that are involved, and why I think this fits perfectly alongside my stock portfolio instead of replacing it. If you followed my channel for any amount of time, you already know that I'm a huge believer in investing. That's what this channel is about. My primary focus has always been my stock portfolio. That's where the majority of my money goes every single month, aggressively buying ETFs and individual stocks and dividend investments and building my long-term goal of reaching $1 million invested. That strategy hasn't changed, and it's not changing because of Fundrise. Stocks are still my primary wealth building vehicle. But as my portfolio has grown, I've started asking myself an important question. Am I diversified enough outside of the stock market? That's really what led me down this path. I already own publicly traded REITs inside of my Schwab account, right? Companies like Prologis, American Tower, Digital Realty, Equinix, Realty Income, and Welltower. And it gives me exposure to real estate and infrastructure, but they're still publicly traded companies. Every single day, they're being priced by the stock market, right? If the stock market has a bad day, those investments often go down too, even if the underlying real estate hasn't changed very much. I wanted something different, not better, just different. That's when I really started researching private real estate. The more I learn, the more interested I become in it. Instead of buying one rental property, I could own tiny pieces of hundreds of different properties, like spread across multiple markets and property types, be it apartment communities, built to rent neighborhoods, industrial warehouses, residential developments. Instead of putting all my money into one house in one city, I'd be investing in a professionally managed portfolio of private real estate. That's intriguing to me. Now, let me be very clear. This doesn't mean buying rental properties is a bad investment. It's far from that. Some of the wealthiest people in America built their fortunes through rental properties. Real estate has created generational wealth for countless families, right? But I've also watched people become landlords and quickly realize that owning rentals is much more hands-on than they expected. Vacancies happen, roofs need replacing, HVAC systems fail, tenants move out unexpectedly, contractors don't always show up when they're supposed to, and while all those things are manageable, they also require time. Right now, time is one of my most valuable assets. I already have a W-2 income, I already have side hustles. Between serving as an active duty military officer and running my dog boarding business and my apparel brand and online stuff, managing multiple investment accounts, creating content for this channel, spending time with my family, preparing for retirement in a few years, I'm already busy. I don't have time. I don't want another responsibility right now. I wanted another asset. That's a huge difference. I wasn't looking for another business to manage. I was looking for another place to put my money to work for me. That's why I decided on Fundrise, and it's a easy entry for new investors. My plan is simple: invest about $500 every month and let time do what it does best. I'm not expecting overnight success. I'm not expecting this investment to double in a year. I'm treating it the same way I treat my stock portfolio: slow, steady, consistent investing over many years. If I stay disciplined, these monthly contributions can grow into a meaningful part of my overall net worth. One thing people often ask is how Fundrise actually works. The easiest way to think about it is this: instead of buying one property yourself, you're buying into funds that own many different private real estate investments. Those properties are professionally managed, and as an investor, you're participating in the performance of that portfolio. You're not the landlord, you're not screening tenants, you're not collecting rent checks, you're simply just an investor. Now, let's talk about one of the biggest differences between Fundrise and my Schwab account, because this is really important. If I own VTI or QQQ in my brokerage account and I decide tomorrow that I want to sell, I can usually do that during market hours, and I have access to my cash pretty quickly after that trade settles. Fundrise is not built that way. Private real estate is designed to be a long-term investment. You generally request a redemption rather than simply clicking a sell button. And eligible funds typically process those requests on a quarterly schedule from what I've seen. That's one of the biggest reasons I'm only investing money that I don't truly expect to need anytime soon. Honestly, I actually like that feature. It forces me to think long term. It removes the temptation to constantly check prices or make emotional decisions. This isn't money I'm planning to use for next year's vacation or an unexpected expense. That's what my emergency fund is for, right? That money is intended to stay invested for years while the underlying real estate hopefully appreciates and generates income over time. I also think this fills an important gap in my overall investing strategy here. Right now, my stock portfolio is heavily focused on long-term growth. I have tech companies, semiconductor companies, ETFs, dividend stocks, REITs, and other investments that I believe will continue growing for decades. Adding private real estate gives me exposure to another asset class that doesn't always move the same way as publicly traded stocks every single day. Again, that doesn't mean it's immune from market conditions. Real estate has its risk too. Interest rates matter, property values can decline, occupancy rates can change, development projects can run into delays. There's no guarantees, but I like having another piece of my overall investment strategy that operates differently than my stock portfolio. Another reason I feel comfortable with this approach is that I'm starting small. $500 a month is meaningful, but it isn't so large that it disrupts everything else that I'm doing. My stock portfolio is still receiving the majority of my monthly investments. My dividend portfolio continues growing. My retirement accounts continue growing. Fundrise simply becomes another bucket. Over time, I like how it performs. If I like how it performs and it continues fitting my strategy, I can always increase those contributions later. There's no rush to it. One thing I've learned over the years is that building wealth isn't about finding one perfect investment. It's about building multiple high-quality assets that work together. My military pension will eventually become one income stream. My stock portfolio becomes another. My VA disability becomes another. My dividend portfolio creates another source of income. My side businesses generate cash flow. Now private real estate becomes another piece of that puzzle. I don't want my entire financial future depending on one asset class or one source of income. I want a system where multiple assets are working together to create long-term financial freedom. I'm also excited because this gives us something new to document together on this channel. Just like you've watched my stock portfolio grow this year pretty much, now you'll also be able to watch this private real estate portfolio grow as well. I'll show you the contributions, the account balance, the distributions, the returns, and my honest thoughts along the way. If it performs well, you'll see it. If it underperforms my expectations, you're going to see that too. I'm not here to sell anyone on Fundrise. I'm here to document my actual investing journey, the good and the bad, so you can see exactly what happens over time. At the end of the day, I didn't choose Fundrise because I think it's going to outperform the stock market every year. I didn't choose it because I think rental properties are bad investments. I chose it because it fits my life right now. It allows me to gain exposure to private real estate while continuing to focus on what I'm already doing well. I can aggressively keep investing in my Schwab portfolio, keep building my dividend income, keep running my side businesses, and still slowly build a meaningful position in private real estate without taking on another job or taking any of my time. Sometimes the best investment isn't the one with the highest possible return. Sometimes it's the investment you'll actually stick with for the next 10 or 20 years. I think this is one of those investments for me, and I'm excited to see where it goes. I hope you'll follow along the journey because this is just the beginning of it, and I've got some other ideas in mind for private real estate as well too. But I appreciate you guys watching this video. If you guys enjoy my content, hit the like button, drop some comments, and hit that subscribe button.